So everything indicates that the market is going to continue its growth phase in the current year, 2022, albeit not as hot as it has been last year. They predict that we will see a softening in the market in 2023. We also hear a lot of talk about rising interest rates. Predictions are saying that we won't see that probably till 2023, or at the very earliest towards the latter part of this year. What's my prediction on this? Well, I can safely say I have no prediction because I've got no clue. And to be perfectly honest, I don't think anyone really does. If I had any idea, I would have bought 10 properties at the beginning of COVID-19 and made an absolute killing. What I do see happening is a bit of a hangover from the construction industry. We've seen some huge delays in that area on the back of, I suppose, lack of trades, lack of staff, a huge uplift in construction, also lack of materials. They've been hard to get. There's been supply chain issues. So we've seen quite a bit of delay build up and a bit of a backlog in the construction industry. And I think maybe this year that will start to clear, but it won't happen real soon. So obviously one of the driving factors in our property market have been long-term, historically low interest rates. There's no sign on the horizon that they're going to increase anytime soon, but saying that, we have seen a plethora of fixed rate increases over the last 3 to 6 months, which has definitely softened the market somewhat. But also, we've seen some regulatory changes where the banks have had to increase the buffer they apply to interest rates when they're calculating your borrowing capacity, and they've had to increase that buffer by 50 basis points. So when you are assessed existing lending or new borrowing, they add an actual 3% buffer to the interest rate, which is called sensitising, and then they calculate your borrowing capacity based on that. So that will certainly probably open up a little bit more opportunity for first home buyers, because that extra buffer will probably hurt people that have multiple loans, multiple properties, more so than someone with just one property or entering the market for the first time. The great news is if you have held property over the last 2 years, you've done extremely well. You would have seen increases in your values of up to 30% in some locations, which is fantastic news. So what does that mean for you? It means there's some opportunity to utilise that equity in a positive way. So if you happen to have purchased your first home using a family guarantor loan, your parents are going to be really happy, because most people are now able to refinance their home standalone and release their parents' property that was providing guarantee at the start, because they now can stand alone at an 80% loan to value, which is fantastic. We're seeing a lot of that over the last few months. There's also equity available should you want to release some equity to do some renovations to your home. Alternatively, you may want to release some equity to invest, whether it be in shares, or use that equity to help you buy another property. So for any worthwhile purpose really, you can utilise that equity, leverage off it, and help increase your portfolio. And finally, I want to just touch again on available redraw or extra payments you've made on your home loan. I put a little video out at the very beginning of COVID when people were in a bit of a panic, and I instructed my clients to pull out any available redraw they had sitting on their loan and to put it in their offset accounts, or if you don't have an offset account, into another savings account. Because when you pay extra on your home loan, that is no longer officially your money. You've paid the loan down, and it is always at the bank's discretion to let you take that back. Just because you have redraw available, the bank can stop that. And we actually saw a lender do that in the early stages of COVID, and did cause a mass panic with their clients, because they were no longer able to access their redraw available. As always, don't hesitate to contact us if you need any help or advice around your finance, that's what we're here for. We look forward to working with you in 2022.